Hello, everybody. This is Clayton again, coming back with a new episode. As you see on my screen, and as I know anyone watching this video knows, today was a crazy day in the markets. The Dow sunk by 2,013.76 points, which is by far the most it's ever had. You'll see in the headline of this article on CNBC, the worst day since 2008, and that is because of the percentage. It dropped 7.79%, which does make it the worst day since '08. So it's uncharted territory, especially for a lot of people that are investing, my age included. I wasn't investing in the market back in '08, '09. But again, I've kind of said this throughout the whole thing. This isn't a time to panic. This isn't a time to freak out. Yes, it was. Thanks for the pop up. It is not a time to really be scared of anything as a dividend investor. So I'll show you my portfolio. You'll see the portfolio went up a little bit. Dividends, I think, are about the same at $10 still. I'm slowly getting those paid out now, and they're starting to get reinvested. But as a dividend investor, this drop in stocks, this fall correction, some are saying crash, even though it's not a crash. I wouldn't consider it that. All of the above, everybody's panicking on. And as a dividend investor, as someone, hopefully you're watching my channel that's doing long-term investing, there's no reason to panic. I went over this before. It's the analogy with the home that we saw. You're not selling the stock today, so its value means little to nothing when it comes to that aspect. Unless you plan on turning around and selling that stock today, tomorrow, next month, or even next year. Depends on how long it's going to take this market to recover. What it's valued at now doesn't mean anything, and it should have no effect on how you feel internally about the money you're building, your portfolio you're building. If anything, you should realistically be looking at this as more of an opportunity to keep investing. Now, I've gone over this in the past before, but I want to stress this, especially now because the market's continuing to fall and nobody knows when it's going to bottom out and nobody knows when it's going to bounce back. I personally would recommend, again, I'm no financial expert. Let's make that perfectly clear before we do any of this and before this video continues. If you need financial advice and you're looking for that, please reach out to your own financial advisor. Do not take what I say as gospel. I've said this in every video, but I want to make it, especially now, because I'm going to give advice that I feel is relevant, but do not take it as gospel or what you should do. Again, research everything you do. But if you're going to invest in this market, as I am right now, you need to dollar cost average. And I'm pretty sure we've gone over this in the past, but if someone has not seen that video, or maybe I hadn't covered it and it's just things I've spoken to on Facebook and with friends, dollar cost averaging is, let's just say you have $10,000 in, and I'm just picking a number that I don't have, $10,000 sitting in your bank account that you're going to invest. You've got to put aside, it's time to invest $10,000. Because the market is going, it is unstable right now, you don't go and invest all $10,000. If you do that, you very well may be above where it's going to bottom out, and you may be hurting yourself in the value and the money you can gain in the long run. Dollar cost averaging is, let's just say hypothetically with that example, let's just say for the next, we'll say every Friday for the next few weeks. Every Friday for the next 10 weeks, you put $1,000 into your portfolio and buy stocks with that. That would be dollar cost averaging. You're hitting the market continuously week after week as either the market's going up or going down, and you're not throwing all of your money into one lump sum at one time. Because you, just as I don't, nobody knows what's happening with the market right now and when it's going to bottom out. And it would be unfortunate if you can buy a bunch of stocks next week for cheaper than you were to buy them this week. Or again, you wait till next week and you can't get any stocks. They've all gone up in price and you've lost your opportunity. So dollar cost averaging is what I would do personally, and that's what I'm doing. Obviously, we've gone over that I do the monthly, now it's bi-weekly, or bi-monthly, sorry. The semi-monthly payments to my account of $125, but I've kind of really been going through my bank account and kind of looking at things and restructuring. And I have put more money in recently while everything is starting to fall. So let me show you specifically. So you see right here on the 2nd, that was my $125 that was going to my account, 54 cents from dividends. Then I put a $200 deposit in on the 5th. That next day, the 6th, we went over this again last video, but that's when I bought AT&T and Target and Coke and some Carnival and just everything you see on screen. And then yesterday, last night, I saw that the futures were going to open already 1,000 below. And I figured, okay, this is another time to throw another $200 in. So I looked at my bank account, had about $200 I can chuck in there. So I went in, deposited $200 last night, and today I bought buys. And specifically, I adjusted my pies, and I'll show you in a second, where bonds are now 5%, and I lowered everything else because I really want to keen on specifically Carnival, and JP Morgan fell a lot today, Wells Fargo, AT&T, and a little bit of Target. So I'm also putting money in during this dip. I've seen a lot of people on different Facebook groups saying that it's a mistake and you should wait for it to bottom out because you're going to lose money and things like that. But they're speaking, and you may see that too, but they're speaking as somebody that is going to be trying to trade their buys in the next maybe year or less. And for those people, unfortunately, I can obviously recommend stocks to you, but that's not something I deal with. So it's not something I really feel comfortable saying that this is a good or bad buy. That's not the kind of investment I am in. That's not the kind of research I do. So anyone that's a long-term dividend investor and you can, if you have some money to put into it right now, now's the time. And like I said, figure out a budget and dollar cost average and slowly put money in, because it's the perfect time and you want to be able to get them as the market is falling. So that was one big thing. And obviously the people, I'm assuming everyone knows, but we all saw overseas there was the Russia, Saudi Arabia oil spat that's going on, and that's what crushed the market today, mixed with the illness we went over last time. I can't really talk about that. So that's kind of what's hurting the market now. But I wanted to focus on something that I saw the other day. It was when I was watching Fox Business, and this isn't a stance to say where I stand politically. I just happened to be watching Fox Business at the time, and Larry Kudlow, who we've addressed before in these videos, was talking about the economy, and of course he's going to spin it to make it where it looks good for himself and his cabinet and everyone working on in this economy. He's not going to want to make a doom and gloom for that. But he touched on something that I really want to focus on and point to. So let me pull the video up. So you'll see in this video, let me make it a little bit bigger. Just listen to when he's asked this question.
Larry, can we look forward to this weekend, maybe an announcement about these micro policies, these micro stimulus policies?
I would not speculate on that, Stu. I just wouldn't speculate. All I can say is NEC and Treasury, Secretary Mnuchin and I and others, we are looking at a whole variety of issues. We will be in constant contact with President Trump, and I don't want to predict the timing of it, but I just want to give you, I think I've given you more info today. We're not looking at big, expensive macro cash rebates, helicopter money from the sky that never works. We want to have this targeted in a timely fashion for those areas that have been hit the worst. And I just want to repeat the view of our distinguished veteran healthcare people from CDC and elsewhere. Most Americans have very low risk of contagion. That's so important.
Okay, I don't mean to cut him off, but again, it's what I was saying before. He's kind of spinning it to fit into their narrative and fit that. I'm not taking a political stance on this. I just wanted to say that they've talked about essentially what they're stating is essentially small buyouts, or not buyouts, small bailouts for the industries that are suffering most. I'm assuming they'll mean travel, like cruise lines and airlines, and energy when it comes to oil. But that was what they were talking about. This was on the 6th. So what is that? Today is the 9th. So that would have been Friday. And then as I was getting ready to make this video, Trump, I guess, released this statement, and I wanted to pull it up. And he talks about a proposed payroll tax cut and other measures to offset the coronavirus damage. You'll see it says President Trump said Monday that he is looking at a possible payroll tax cut along with other measures to help American workers and boost the economy, which has been hit hard by the coronavirus outbreak. So what we're learning from this is that it looks like they are taking steps to essentially boost this economy back up because they're not liking what's happening. Obviously, the drop is affecting what he feels as his position when it comes to a strong economy. Not going to weigh one way or another on that. It's everybody's opinion. It's an illness, and it is what it is. And obviously, I just realized midway through this video, I said the word that I didn't want to say. So let's see if YouTube knocks this video out of rotation. So actually, what I'm going to ask while I just said that is, anyone watching this video, I would truly appreciate a like on this video. From what I've learned, if you mention the illness, air quotes, YouTube does not push your video at all. And if I'm not a monetized channel by any means, but they demonetize your video and they essentially want to shut it down. So I'm curious to see if we get a bunch of likes on this video, does it kind of beat that formula that YouTube is pushing through, or is that just going to be what it is? On another front, I am shocked that I'm almost at 70 subscribers. I know I'm becoming a broken record by thanking you guys every video that I make, but I'm just blown away by the support I'm seeing video after video. I really don't know what else to say besides thank you. If there's anything I could do, I told you, if there's any questions you ever have, please email me. My email is Clayton, so ClaytonS, so Clayton's Cash 89 at gmail.com. That's ClaytonS CASH 89 at gmail.com. And I'll answer any questions you may have, talk about it on the show if you'd like me to, but if it's something that's more private, I'll definitely keep it just between the two of us. But I really, truly can't say thank you enough. You guys have meant the world to me. It is something that I look forward to making these videos. I look forward to doing this research. Aside from just for me and my family, like, this has become something that has essentially become a hobby of mine. And it wouldn't do that, and I wouldn't have such a fond enjoyment of it if it weren't for you guys in this community that it's slowly building. Yes, to many people, 69, 70 people, whatever this video ends up having subscribers, is absolutely nothing. But to me, it means the world. And I'm not going to set a goal of, I want to hit 100 subscribers by the end of July or anything like that, because I've already surpassed anything that I thought I would get to. Now I'm just rambling, and the main purpose of this video, as I addressed earlier, was anyone that's still watching, please don't panic as a long-term dividend investor. This is the perfect time for you to start to get in the market. Don't throw everything in the market. The market's probably going to continue to drop. Nobody knows what's going to happen. But just be careful with how you invest. Make sure you do your research. I've gone over in past videos of mine stocks that I really like, and I'm going to continue to invest in those stocks because nothing changed 4 weeks ago when I loved those stocks today. Nothing has changed. Yes, Carnival is getting less traffic because of the illness, but as a company, nothing's changed with Carnival. So they'll bounce back, in my opinion. And the same goes for IBM and Coke and Disney and you name it. They all are companies that I invested in when the market was at its high because I felt that they were great companies to hold for the rest of my life. And now that the market has come down, I'm just going to keep adding those into my portfolio and picking up more and more of those stocks. So for anyone that's made this far in the video, again, if you want to drop a like, I'd greatly appreciate it. Leave a comment, I'll gladly answer it for you. Just have some communication back and forth. But thank you. Thank you for watching. Thank you for subscribing. And I hope you guys have a great rest of your day and a great rest of your evening.